Today, we are fortunate to be joined by Jorge Ganoza. He's the CEO of Fortuna Silver. They're a global intermediate gold and silver producer, currently with 4 mines: Mexico, Peru, Argentina, Burkina Faso, and an exciting 5th mine that's nearing completion of construction in Cote d'Ivoire, the Séguéla mine. We're going to talk about all that today, but first, Jorge, welcome to Ron's Basement.
Ron, a pleasure to be here and the opportunity to speak to your audience. I appreciate that.
Well, you're definitely one of my favorite guests to have here in the basement. So thanks again for joining us. Can we touch on 2022? I mean, we're almost now through the first quarter of 2023, but you recently put out your report for your full year numbers. I'll just mention briefly what I saw, and then of course, I know you're the expert when it comes to the company. You can maybe share with us some of your insights, but I thought that 2022 was actually a very good year for the company. You met your production guidance. You basically built a mine, the new Séguéla mine in Africa, on budget. And as far as I can see, did it, a lot of it, most of it, with cash flow that you generated from the company. Any thoughts or comments on, as you look back on 2022?
Yes, our business, the mining business is driven by physical metrics, achieving your physicals. So first, as you pointed out, we delivered on our guidance, right? We delivered around 401,000 ounces of gold equivalents, which is what we told the market we would do. With respect to cost for the year, we also met guidance. We had only 1 mine in the portfolio that came some $40 above the upper range of all-in sustaining cost in the guidance. That was the Lindero mine. And, Argentina is the one place where we suffer the most the pressures of inflation. So, it was a marginal miss on guidance, just a few, $30-40 on top of our guidance, but still the mine was able to produce at a very competitive all-in sustaining cost of $1,142 for the year. So, the production was there, the costs were there. We had a strong, mine operating income of around $147 million. Or adjusted net income came in at 15 cents per share, or $43 million for the year. We had a strong EBITDA of $245 million and net cash provided by operating activities of $194 million. We provide also a measure of free cash flow from ongoing operations, and that figure was a robust $69 million for the year. No doubt that the business, and not just our business, but across the industry, we have seen margin compression throughout 2022. If we look at the World Gold Council figures, the 50% of global mine supply is produced at a median cost of about $1,300 per ounce, all-in sustaining. That number 8 quarters ago was $1,000, right? So mining should be a natural hedge against inflation, but in 2022 we basically sold gold at the same price as we did in 2021, and silver slightly below even. So that hedge has not materialized. We're seeing an exciting movement in price in 2023 that is giving us a relief on margins, but that's where we are.
Yeah, I think despite the fact that you were managing the company through, like you said, a period where the gold and silver prices remained relatively stagnant, but cost went up, you still, and the thing that really opened my eyes was when I dug into the MD&A document and that cash flow from operations. Now, I have a background in accounting, so I understand how accounting works. I worked for a Big Four accounting firm. At the end of the day, you know, you can dress numbers up with accounting accruals or dress numbers down. What it really comes back to is cash flow. And the fact that you guys generated almost $200 million of cash flow from your operating activities. I know there were some big write-offs for impairment and of course depreciation, which on a book number, you know, affects net income, but at the end of the day, it comes back to cash. And if you look at the cash that the operations generated last year in that environment, to me, it's very impressive.
Yeah, you know, the fundamentals of the business remain sound. As you pointed out, we're making, this is a never depleting business, right?
Right.
We are depleting our business every day. That's the nature of mine.
Right.
And so we are generating healthy free cash flows. We have a long life of reserves. We have currently about almost 3 million ounces of gold equivalents in reserves, plus growing measured and inferred resources. We are having a lot of success on the exploration. So, we're looking forward to being able to extend those lives of mines and whatnot. Hey, listen, I'm not going to sugarcoat it. We took a big impairment charge, a loss in the quarter, a non-cash loss in the quarter. We were hit by higher discount rates, shrinking margins. You know, costs have gone up, as I said in the beginning, and prices are, you know, the prices we're using to look into the future conservatively stayed flat. So we had margin compression in that impairment assessment. We had higher rates, and we had to write down exploration. So, you know, every time we're investing in exploration and we don't discover or have material discoveries, we write down those exploration investments. But that's the nature of the business. We you know, I'm not going to stop investing in exploration just because an accounting loss, right?
Right.
It's not the nature of the business.
So let me, I want to interject one quick thing. So the accountants make you mark things to market, right? And I'm just laughing because I'm thinking, why didn't they make Silicon Valley Bank mark their book to market, right? I mean, because I heard you say that these impairments that you took were I don't want to put words into your mouth, but it's conservative. It's a very I mean, you're writing things down, and that there's a chance, and I want to emphasize a chance that even if things change in the future, sometimes these or portions of it could get even possibly reversed at some point.
Yes, and over the years, we have taken impairments in the past. For example, the Cayoma mine, we took an impairment at the Cayoma mine some years ago, probably 8-9 years ago. The mine at the time was running low on reserves, and we had been investing on exploration and infrastructure. So we took an impairment. Then with exploration success, we were able to extend the life of mine, which today looks more like 10 years. At the time, you know, 8-9 years ago, that mine was set for closure. It had 2-3 years on reserves. So we took an impairment, and then a couple of years later, took an impairment reversal, right? So, you know, it's balancing the accounting books. The key thing for us is that our business is generating, even in light of margin compression, strong free cash flow from ongoing operations. And what's exciting to us is that our flagship asset, the mine that will provide the widest margins for us, is coming to production in the second half of the year, right? That's the Séguéla mine in the Ivory Coast. Yeah.
And you are wrapping up construction of that. I want to point out also as well that it's been built on budget, which is a big accomplishment for any mine being built. We've seen what's happened with other mines under construction over the last 2 years. And you really, from a balance sheet, just to touch on the balance sheet, I want to point out you, and I've heard you refer to it, and I would refer to it also as a very strong balance sheet, very little debt. You didn't really take on much debt to build the Séguéla mine. And it's exciting what's going on there. I mean, there's, like you said, opportunity for low-cost production, and I'll let you talk more about that, but also exploration at Séguéla is quite exciting as well.
Yes, Séguéla will be our fifth operating mine in the portfolio. It will be our most important mine in the portfolio. Why? Because it will have meaningful production, meaningful annual production at very competitive all-in sustaining costs. It has long life of reserves, currently 9-10 years, plus exciting exploration potential. I mean, we have on top of the 9-10 years already a new deposit called Sandberg. We're currently doing infill drilling, but we have 750,000 ounces between measured, indicated, and inferred that we're infilling with the expectation of converting a lot of those ounces into the mineral reserve. So those ounces, 750,000 ounces, are not in any mine plan yet. Mm-hmm. No, so we have guided for 2023 60,000 to 75,000 ounces of gold, which, you know, it's the ramp-up phase starting in May, June. So this year we should see between 60 and 75,000 ounces of gold produced at an all-in sustaining cost at or below $1,000 per ounce, right?
Wow.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
Can I ask you a question as an accountant? You talked about 750,000 ounces that you think can be at some point converted to reserves or reserves. Is that, you know, in light of the fact that you took this impairment charge in the fourth quarter, I'm just curious, are those 750,000 ounces, are they reflected anywhere in the balance sheet? I mean, are they
no,
anywhere?
Accountants only take away. They don't
Okay.
give you, they don't add anything. You know,
okay.
I'll give you. We took an impairment our largest impairment was at the Yaramoko mine in Burkina Faso, right? That was the largest impairment we took. Now, when I look at the business in Burkina Faso and Cote d'Ivoire, I think of it as the West African portfolio in the company. Mm-hmm. And, so from the time we made the acquisition, which was July 2021,
okay,
to this date, we have increased ounces by almost 20%. Mm. And that is accounting for depletion, because at the Yaramoko mine, we're depleting their body, we're mining. We produced over 100,000 ounces of gold in 2022. So we're depleting, plus we did a write-off of ounces at Yaramoko as well, about 166,000 ounces from the assessment of the crown pillar, which was a recovery there. So in spite of depletion and write-off of 166,000 ounces, the West African portfolio grew total ounces by almost 20%. So that's the way I look at it, right? And of course, the growth was driven by Séguéla's success on exploration. Yeah.
But that 20% increase, does that include the 750,000 potential
Yes,
ounces?
of course.
Oh, okay,
yes, of
okay,
course.
yeah. So
yes,
so when you look at it as a combined entity, over less than 2 years, you've grown
The gold endowment has grown
Yeah.
by 20%.
and that includes the depletion from mining and the write down.
There are wins and losses. There are wins
Right.
and losses. There are depletion. We're depleting the Yaramoko ore body. We're mining. We're extracting and selling that gold every month.
Right.
Then we lost some ounces due to a write-off of reserves. We had discoveries at Séguéla. We had some marginal discoveries at Yaramoko as well. So when we do the plus and minuses, we come up on top by 20%.
Yeah. At the end of the day, you're winning in West Africa right now.
Yes, yes. So in less than 2 years, more like 18 months, really, we have been able to come up with more ounces and balance, not only balance depletion, but go beyond and bring more ounces. So we feel very calm and confident on how we're doing in West Africa. Absolutely.
It's very exciting when you look at Séguéla in terms of exploration potential beyond Sunbird and what you've already looked at. Would you say that you've explored 30-40% of the total package, or is there?
No, not even. We have a commanding land position at Séguéla. We have a property package that stretches from north to south. That's the strike of the mineralized structure and geology, north to south. We have we control 30 kilometers. That's 30 kilometers of that belt. So we have a commanding land position, and 2.5 years ago, 2 years ago, the Séguéla reserves had only 4 ore bodies contributing reserves to the mine plan. Those were Antenna, Agouti, Boulder, and Ancien. 4. Since then, so in a 2-year period, we have added the Kula ore body, which once in operation will be among the highest grade open pits in Africa with about 6.5 grams gold. And subsequent to that, we're in the process of adding what will be the largest deposit of them all, Sunbird, with 750,000 ounces in resources that we're aiming to convert as we speak. So I expect the conversion drilling we're doing will be complete by in a couple months. So by mid-year, we should start working on reserve estimation at Sunbird. So we'll have the 6 ore bodies there. And that's on a small area. We have over 30 prospects, and we have a news release out on exploration at Séguéla that I invite you to look at over the last few weeks. And there we are talking about Badior, Barana, Badior, exciting prospects in the property package, that we're going to be drilling in the second half of the year. We have Gabbro North, Winnie, P13. So, we have an inventory of about 30 to 40 prospects that have not been drill tested properly yet or touched.
That could keep the company busy for a few years.
The exploration or view on the exploration potential of the Séguéla property package was probably the main driver for us to go after the Roxgold acquisition and business combination.
That was the next question I was going to ask you. Was that the driving factor behind the acquisition of Roxgold? Anything else you want to touch on at Séguéla? It's just, I know it's super exciting, and
I was there 10 days ago. I spent 10 days at Séguéla, and I'm happy to report that everything is continues advancing according to our plans. Okay. A lot of the work is not on construction anymore, but rather commissioning and operational readiness, right? So While on site, I was able to observe the commissioning of 3 of our main conveyor belts on the crushing circuit. That's always exciting when you see equipment moving and commission. And the discussion with the owner's team, with our team, revolves around operational readiness, first fills, key spare parts, key positions, field. So yeah, it's exciting times.
Interesting. You know, and when I kind of move off of Seguela for a second, as I think about 2023 for the company, and I follow the company closely. It's no secret. I, have for me is a big number of shares that I've invested in Fortuna for years now. It feels like in Africa, in Mexico, in Peru, in Argentina, that I know that mining is a difficult business, right? And there's always things that pop up. But right now, when I look at everything, it feels like the company is, or at least for the time being, positioned to do very well in all those regions. Is that a safe assessment of what's going on?
Yes, we've been coming out of, we had to contest with some challenges in 2021 and into 2022, but there's no shortages of problems and challenges in this business, but we've been able to address them, resolve them, and continue to advance our business, right?
Mm-hmm. Right.
We had a contentious situation with the Mexican Ministry of Environment, and since late 2021 now, that created a lot of noise for the stock, I believe, and concern to some investors. But that was resolved partially for now, and our mine has never lost a day of operations. And we are currently working under our 12-year environmental impact assessment, and we're under the protection of the courts. The courts continue to rule in our favor. So, that created some noise. Then there were some legitimate concerns. I'm talking about a year and a half ago, 2 years ago, when we did the Roxwell acquisition in July 2021, about our ability to integrate a West African business into a company that was better known for its Latin American presence and the fact that I am a Peruvian national with a lot of experience in Latin America. A lot of guys were asking, what is this Peruvian guy gonna do in West Africa, And my reply to that is, well, there are a lot of Canadians and Australians in West Africa as well. What are they doing there? So I think, and some investors had concerns about West Africa, had concerns about West Africa sounded like a foreign and exotic place to some of our more America-centric investor base. Legitimate questions, as I said, about our ability to integrate that West African business, and I think we've been dissipating all of that with the success we had advancing Seguela on time, on budget. You could not advance a project like that without a successful integration. So, we're delivering the results, and it's only now in the second half of 2023 that we're going to start harvesting the rewards of that acquisition. Right. People have to realize that. It's been, since July 2021 to July 2023, it's going to be 2 years of hard work to start harvesting.
Yep.
No? So we have seen the acquisition, the doubts, and a lot of hard work to get to where we are. And we're prepared to start harvesting starting in the third quarter of the year.
Yeah, right. That's very exciting. And I want to add also, you did that during a period of very low sentiment for the general mining sector. I mean, if you look at the GDXJ or if you look at the price, the sentiment, and I guess I'll turn it around and make it a positive. we could be moving into a period where Fortuna begins to harvest the benefits of this acquisition. If we can continue to see a good gold silver price, and the sentiment still for the mining sector is pretty darn low. If we just get a little improvement in sentiment in the general mining sector, it could be some exciting times for shareholders and for the company as well.
Yeah, it is a funny business because it's cyclical, as we all know. And, from where I sit, when I make decisions on capital allocation, acquisitions, how and when to grow the business, when there is a well-established bull market, everybody wants you to build a mine. Everybody wants you to build a mine, and everybody wants you to pay or will support you in paying whatever stupid amount of money to make an acquisition. And that's really the worst time to be making big corporate transactions, and is the worst time to be building mines, because everybody's building a mine, and there are bottlenecks in this industry. The amount of people. I had a call yesterday with one of my professors from university. I studied mining and geological engineering in the US, and I had a chat with one of my professors there, and it's a mining school in southwestern US, and there was only one freshman enrollment in the mining program.
Wow.
And only one freshman.
Wow.
In the UK, the Camborne School of Mines, which was the last mining school in the UK, has placed its mining program on pause. They're not taking more mining students because of low enrollment. So, those are industry bottlenecks. There's not enough people, not enough manufacturing capacity for the equipment we need. So when everybody wants to build a mine, delivery times on key equipment packages and things just get crazy, and things get more expensive. The engineering companies that provide services to us, they only have so many people with all the experience and the gray hair, and so you don't get the A team for your project. You might not even get the B team. You start getting the C team and
Right.
So what makes more sense is to make acquisitions before all of that. And that's difficult to time as well, right? But conceptually, that's when you want to make your acquisitions, and that's when you want to build your mines. It's difficult because investors don't necessarily support you to do that at those times. Right. They don't. They become risk averse, but when a bull run is well established, everybody's pushing us to build and acquire. Right. And is there exactly the wrong time to do that?
Yeah. Well, and that makes perfect sense. And as you were saying that, what I was thinking is what could potentially happen and might be a better place for a company, and including Fortuna, to be is in a position of just starting to harvest, right? When the sentiment changes, because like you said, trying to build, it's like, I don't know, trying to buy an umbrella during a rainstorm. You'd rather already have your umbrella and be ready for it and positioned.
Yeah, and again, that's very difficult to time, and
sure.
But conceptually, that's where we want to be, and that's where we try to be, right? Yeah.
And in my observation of you and Fortuna, two things. You've been very steady over the years in terms of your growth. It seems like it's been a steady progression since I've been around. I kind of came around during the Lindero construction, but it's been a steady I mean, one way to manage that is to be more steady as opposed to erratic in one way or the other. And the other thing that I want to say is, and it's not just me that says this, and I think I say this to you every time we do an interview, is your reputation and the reputation of the management at Fortuna is that you deliver, that you and I'll give you a compliment because you've done that again with Seguela, that you always, you're not perfect, you can't predict the future, but you have a track record of delivering on doing what you say you're going to do.
This is a very difficult business. We work in remote locations. We have to deal with the uncertainties of estimates around mineral resources.
Sure.
And geology, mining, metallurgy. Then on top of that, the challenges of infrastructure in remote locations, building, developing, managing infrastructure in remote places. We are an extractive industry, and our relationship with host governments and host communities is different than if you are in just a commercial business, for example, a Toyota dealer or whatever your business might be, selling blenders or whatever your business, making toothpaste, or the relationship of extractive industries with host communities, host governments, have a complete different dynamic. And then also the challenges of dealing in an industry that is full of bottlenecks and challenges. No? Mm-hmm. So I know every business has its own challenges, but these ones have particular ones. And I am proud that all the mines that we identified, developed, and brought into production are still in production today. No, so that is a point of reference to me. Yeah. As you said, we said we were gonna develop them, and we did. Sometimes, it took a bit longer or not. For example, the Lindero construction was a challenging construction at a challenging time. Everything was aggravated by the COVID pandemic, right? That mine was completing construction on March of 2020 when COVID set in. So that was, aggravated everything. But the mine is operating. In 2022 has been our largest free cash flow contributor. We employ a workforce of 5,500 men and women that make Fortuna a reality every day. And I'm very proud of that, right? In remote locations, away from their families, on fly in, fly out rotations, in Burkina Faso, in Cote d'Ivoire, in the highlands of Peru, in the highlands of northern Argentina, in southern Mexico, geologic teams roaming those regions. So, I'm very proud of the collective effort. And, we don't get them right all the time, but we try to keep our mistakes small and march on, right?
Right. Well, and you said it earlier, right? You're not going to always have wins, but when you have more wins than losses, you're moving forward and making progress.
And all our mines continue to operate. No, all our mines, the mines we said we would build, were built and are operating and contributing to the bottom line of the business. Absolutely.
Wow. Thank you, Jorge. Is there anything I missed? Anything you want to mention before?
No, I mean, Carlos, our director for investor relations, keeps an updated construction gallery in our website for Seguela. So, you can go in there and look at some photos and videos and follow this last mile of the construction and delivery of that mine.
For fortunasilver.com, correct?
Yes.
Okay. Thanks, Jorge. I can't help but mention this one last thing keeps coming into my mind that, a year from now when we talk, and we'll talk before then, but when we talk 1 year from now, I'm just wondering, you know, if metals prices continue to even stay where they are, or maybe even improve just a little bit, and the company has a good solid year of operations, how things could look very differently even a year from now. So I think we're in for some exciting times.
Absolutely. We look forward to that.
Sounds good. Thanks. Have a good rest of your day, Jorge. Thank you.
Thank you for the invitation again, Ron, and a pleasure to speak to you and your audience.
Thanks.